Hello and welcome to today's webinar. Today's topic is tax planning for businesses, and there will be a second edition, tax planning for individuals and family groups. Just a little bit of housekeeping, our disclaimer, and a little bit about who we are. LDB Group, we're trusted advisors for our clients. We're based in the eastern suburbs of Melbourne. However, we do have clients Australia-wide and even some international clients. Currently, there is 65 of us and within our accounting and tax division, superannuation, wealth and property, and all our divisions work together to service our clients. So let's get started. With the end of the financial year fast approaching, businesses should be reviewing their current financial position while also planning for the next financial year. Whether it's maximising deductions, restructuring for tax efficiencies, or taking advantage of government initiatives, the key is to be proactive, working with an accountant to ensure you implement the right strategies tailored to your business's needs. Okay, so now we're just going to get started with some things that you can consider to help you and your business. The first one we're going to look at is the instant asset write-off. So currently, the instant asset write-off is for any assets that cost less than $20,000. You get an instant deduction for that asset. Now, you have to be classified as a small business, and that's with an aggregated turnover of less than 10 million. Assets must be first used or installed in the current financial year or ready to be used. So that means you need time, and it's probably now. If you're looking for an asset and your business has a need for an asset, you need to purchase it, and it needs to be delivered and installed ready for use before 30th of June. Now, to look at the timing, you need to look at your cash flow, you need to look at your profit and loss and whether it makes sense to bring forward that deduction, or it might make sense to delay that deduction into the next financial year. The federal budget originally got announced that it wasn't going to be extended. However, I believe that's been redacted, and they are looking to extend that to the next financial year, but it has not passed Parliament. The next one is income deferral and expense prepayments. So again, what accountants work with their clients is looking at the current profit and loss and projecting the next month or two, so May, June, and seeing whether there is a profit there or a loss. And it's really working with the client and seeing if it makes sense for any invoices in June to be delayed in July or bring them forward conversely, just depending on what your profitability is looking for the current financial year, but also projecting what it's going to look like in the next financial year. And the same with expense prepayments. You can also look to bring forward your expenses within a 12-month period. So for example, rent, you might bring forward 6 months of rent, pay that up front and get that deduction if you're a small business in the current financial year. Business restructuring, considering whether your current structure is right for your business and its needs currently and where you want to get to. Most businesses, when they first start up, there was a reason why they're in there. It's not always tax, and those circumstances may have changed. So it's a big topic. It's probably a topic for another webinar as well, but it's something to consider. Reviewing and writing off bad debts. So it's a really good time to go through your aged receivables and just going through them and just seeing if there's any there that can be genuinely written off. Now, you have to do all things necessary to recover that debt and have that logged. But if there is a company that's owing you some money and it's been wound up, pretty safe to say you're not going to get paid, and it can be written off, and you just need that substantiation. The other thing to review is your fixed asset schedule. So looking at your plant and equipment and seeing what's there. Has anything been damaged that can't be repaired and should be scrapped? Is there any redundant plant and equipment and assets. So just going through that and just making sure that everything there is still in use. So another big one is superannuation. So from a tax perspective, super is only deductible when paid. So the June quarter, you might want to bring that payment early and pay that before 30 June. It needs to be received by the super funds in order for you to receive that tax deduction. When we start discussing tax planning for individuals and family in our next webinar, we will talk about the contributions, and you might want to pay that if you're a business owner within the business. And again, you need to make sure that that payment to bring you up to the concessional caps is received by your super funds before 30 June, and you should really be talking to your wealth advisors as well as your accountant for this. Another one is capital gains tax planning. Again, this is another big topic on its own. But basically, knowledge is power. So it's just understanding that if you hold assets for over 12 months, you may qualify for the 50% discount, and that's if the asset's held in your individual name, so sole traders, or in a trust. So if you're operating your business in a trust, you might get access to the 50% general discount. So this is really important because you'd hate to sell an asset, 364th day, and you just needed one more day to get that 12-month concession. Also, timing of the assets, looking at that strategically depending on the income year. I always say that you shouldn't make decisions based on tax, but if we're looking at a few days and the market's not going to change, again, this is not financial advice, but looking at your profitability, it might make sense to bring it forward or delay that. And then also, if you do have a capital gains event in the current financial year, it could be a good idea to review all your other capital assets, and is there any capital assets that might be in a loss position that makes sense to sell and bring forward that capital loss to reduce your tax liability. Again, this is a complicated area, and you really should be working with your accountant and financial advisor. So some businesses have staff bonuses. If you have a staff bonus, in order for it to be deductible, it has to be committed before the year end. So that's sending out a letter potentially, so it can still be payable. You don't have to have it paid, but it has to be committed. So have you communicated that to your employees and the amount, and is that evidenced in writing? So we touched on this a little bit earlier, but prepaying expenditure for eligible immediate write-off deductions. So that's small businesses once again. So this turnover metric though is a little bit different to the instant asset write-off. This is 50 million or under. They can deduct any prepayments that have service periods of less than 12 months in the current financial year. So for example, if you prepaid rent for 12 months, you get that full deduction in the current financial year. Just another one, this won't apply for all businesses, but if you do have closing stock and it's consumables, if your business holds a consumable stores or spare parts, and that those stocks have a life shelf of 3 months or less, the ATO's view is that you can deduct the cost of the consumables in that year acquired, as opposed to having to include a closing stock amount. So you may have closing stock and you might need to segregate that between certain items, consumable items that have shelf lives under 3 months and over 3 months. The other one is immediate deductibility for startup costs. So if you're watching this webinar and you're thinking about starting up a business and you're just trying to get an understanding, when you do create or incorporate your company or establish your trust or whatever your setup might be, that's appropriate for you, those formation costs, so the accounting and legal fees to set up that entity, is deductible in year 1, but you have to be running a business. Okay, that's it for today. Thank you for watching. I hope you found it informative and you got something out of it. If you'd like to contact me or anyone at LDB Group, you can see our details, and please contact us, and we'd be only too happy to help you. Thank you and have a great day.